Welcome to Short Economics. In this session, we discuss on balance of payment. In this short video, we will try to cover the definition of balance of payment, structure of balance of payment, causes of disequilibrium in balance of payment, and measures to correct disequilibrium in balance of payment. Nowadays, very often we hear the term BOP or balance of payment. What is balance of payment? In a way, we can define it as balance of payment encompasses all transactions between a country's residents and its non-residents involving goods, services, and income, financial claims on and liabilities to the rest of the world, and the transfer such as gift, grant, etc. To make a bit more simple, we can define it as a systematic record of all economic transactions between the residents of one country and the residents of another country during a given period of time. When it comes to the structure of balance of payment, we can see that generally it has four different parts such as current account, capital account, official settlement account, errors and omissions. The first one, that is a current account. It shows exports and import of visible and invisible items. Okay, so invisible take into account services, transfers and income. Current account of balance of payment records receipts and payment from export of goods and services, and it has two subcomponents. Those are a trade account. Okay, trade account is the register of export and import of commodities or visible items. The second one is invisible account. It is for the register of export and import of services and transfer and income. In the current account, import of goods and services considered as a debt item, while export of goods and services considered as a credit item. The second major structure of balance of payment, that is a capital account. Capital account showing a capital expenditure and income for a country. It gives a summary of the net flow of both private and public investment into an economy. External commercial borrowings, foreign direct investment, foreign portfolio investment, etc. form a part of a capital account. In the balance of payment, a foreign capital inflow, that means investment by multinational companies in India, is treated as a debit item. The third major structure of balance of payment, that is official settlement account. The official settlement account or official reserve asset account is in fact a part of capital account. But countries like UK and US, balance of payment account shows it as a separate account. When it comes to the official settlement account, it measures the change in nation's liquidity and non-liquid liabilities to foreign official holders and the changes in nation's official reserve assets during the year. The official reserve asset of a country include its gold stock, holding of its convertible foreign currencies and SDR, and its net net position in the IMF. The last structure of balance of payment, that is errors and omission. Errors and omission is a balancing item so that total credit and debit of the three accounts must equal in accordance with the principle of double entry bookkeeping, so that the balance of payment of a country always balances in the account sense. Sometimes the balance of payment does not balance. This imbalance is shown in the BOP as errors and omission. The term errors indicate incorrectly recorded items. Omission actually refers to a missing items. Okay, so actually we can say that errors and omission is the balancing part of balance of payment. Now we need to consider the disequilibrium in the balance of payment. When there is either deficit or surplus balance of payment, it is said to be in disequilibrium. Both deficit and surplus of balance of payment considered as a disequilibrium. When a country is incurring more payments from abroad than it has to make, then it is considered a favorable balance of payment, which is surplus. Contrary to it, if a country makes more payment abroad than what it receives, then balance of payment is said to be unfavorable because it is in deficit. The major causes or the main causes of disequilibrium in the balance of payments are a fall in export demand, growth of a population, inflation, huge international borrowing, development of programs, a demonstration effect. Okay, so these are some of the major causes of disequilibrium in the balance of payment. The first point, that is fall in export demand. When a demand for the country's good fall in the foreign market due to changes in the taste and preferences of the consumers, export decreases and the balance of payment will unfavorable. However, the deficit in BOP or balance of payment due to fall in export demand is more visible in underdeveloped countries than advanced countries. Second major cause of disequilibrium in BOP, that is growth of population. In underdeveloped countries, aggregate consumption demand rises due to a rapid growth of a population. Consequently, import of goods increases and export decreases. This creates the deficit in the balance of payment of less developed countries. Third point, that is inflation. Increase in price due to higher wages and higher price of raw materials, etc., makes export costlier. The export in this case decreases. At the same time, demand for imports increases. This results in deficit in BOP or balance of payment. The fourth reason for disequilibrium in the balance of payment, that is huge international borrowings. A country may tend to have an adverse BOP when it borrows heavily from other country, while the lending country will tend to have a favorable balance of payment. The fifth major reason, that is development programs. The reason for adverse BOP in developing countries is large investment in development schemes. These development schemes require import of huge quantity of capital goods, technical knowledge. There are two methods are there to correct balance of payment. Those are monetary methods and non-monetary methods. Monetary method, the first one. Monetary method of correction affect the balance of payment by changing the value or flow of currencies, both domestic and foreign. Okay, so some of the uh, monetary methods are deflation, the valuation, exchange depreciation, exchange control, capital movement are some of the examples for monetary methods. So we will see one by one. The first one, deflation. Deflation means a reduction in the quantity of money so as to bring about a fall in price and the money income of the people. Falling prices encourage exports and discourage imports. Hence, a deflation policy restores equilibrium in balance of payment. Deflation is not considered as a suitable method of correcting adverse BOP because it reduces income and it causes unemployment in the country. But still, it is a good way to correct balance of payment. Second method under monetary method, that is devaluation. Devaluation means a decreasing the value of a domestic currency in respect of a foreign currency. Devaluation is done by government of the country which has an unfavorable balance of payment. It is done deliberately to get its advantages. With a decrease in the value of its currency, the country has to pay more exchange for a foreign currency. In this case, the export becomes cheaper at the same time import becomes expensive. With this, export increases and import decreases. It is automatic and can correct the adverse BOP in the country. The fourth monetary method, that is exchange control. Exchange control is the most widely used method for correcting adverse BOP or balance of payment. It refers to the control by the central bank over the use of foreign exchange. In this method, all the exports are directed by the central bank to surrender foreign exchange earning and it is rationed out among the licensed importers. It means only license holders can import goods. Exchange control does not remove the process of adverse BOP, it simply does not allow the situation to worsen. Hence, it is not considered a proper method to correct adverse BOP or balance of payment. Next monetary method, that is a capital movement. Inflow of capital from the individual and government of other countries, as well as borrowing from international financial institutions like World Bank, IMF, etc., can be used to correct the deficit in the balance of payment. These are the major monetary measures to balance the balance of payment.